Hey everyone, this is Ed Kime, CEO over at Quantcha, and welcome to week 7 of the Quantcha Challenge. It's June 12th, 2015, around 1 p.m. Eastern Time, so let's get started with today's trading session. We'll take a look at our opening portfolio, where we've got 10 different positions open right now across a variety of stocks. We're half bullish and half bearish at this point. Last week we opened two positions, one for craft brewing, which was bearish, and one for Lionbridge, which was bullish. As you can see, both stocks have had pretty positive weeks. Craft Brewing is up over 5%, Lionbridge up over 7%, and our trades have fared as you'd expect on both ends of that scale. For the most part, we're going to hang on to all these positions, which expire next Friday, except for the TD Ameritrade position. That one is pretty far beyond our max loss. So what we're going to try to do is we're going to try to see if we can find a trade today. Later on, in order to close out that position with a little bit less of a loss, if we can get some of the time value extracted out of there. It's going to depend on what the market conditions are, but we will keep an eye on that and update you next week. Now, getting into our performance since May 1st, we've got the benchmark numbers up there. The S&P and Dow are down a little bit this week, and that brought their performance over the past 7 weeks down a bit. NASDAQ's up 1% since May 1st. A long-short portfolio with the stock positions we have would be down 10 basis points. But our net position right now on a cash plus the last price of the options basis, and our stock as well, is up 70 basis points. Again, this is an increasingly inaccurate way to measure our portfolio. What we included in there is those numbers fluctuate a lot depending on when certain options trade. However, if you take a look at the market open perspective, we are up 22%, which is a pretty good position to be in. This is based on the market open pricing. So, of course, as we sell and as we start to liquidate our option positions, that will come down a bit, but it is looking pretty promising for the next 2 weeks. Now, let's dig into Zacks Bull of the day, which is Dycom Industries. They were recently trading around 59.49, and they are providing installation, maintenance, construction, engineering services for telecommunication providers. They've had some pretty good years lately. The organic revenue growth of 13.4% year over year, and their top 5 customers have actually delivered over 23% year over year growth, which is pretty significant. And as part of that, and as part of their recent earnings beats, they've been able to increase the consensus estimates among the analysts over the last 30 days fairly significantly. You can see both this and the next fiscal year are up substantially. These are almost 20% gains on both sides, and so that is a pretty positive outlook for the stock. So let's head out to Quantcha to see if we can find a good bullish trade for Dycom Industries. We've got only 2 weeks left in the Quantcha Challenge, so looking out at these expirations, let's just go ahead for the June 19th trades. And we'll take a look at the stock. We can see that there's an implied volatility of about 30%, so there's some good movement expected. You can see the implied range of that plus or minus 1 standard deviation is about negative 4.5 to positive 4.5% change. And that looks like we've got some pretty good movement there. So let's take a look at a moderately bullish view of the stock, and we'll also change our budget here. We're actually going to bring this down because we're dealing with such short term now that we're going to have some probably pretty leveraged trades here. We want to minimize our downside risk. And the first thing you'll notice here is that these numbers are not particularly compelling. We're not looking at a lot. The option chain's not too bad for this expiration, but as you can see, there's only one option across the entire set that is out of the money. So when we're looking at it going up from a call perspective, there's not a lot of movement to work with. So I think what we might do is let's see if we maybe got a little bit more bullish. Let's go very bullish just to see what we're looking at here. And as expected, this long call for next week is pretty substantial. Obviously, that's looking at a massive upside growth, which is not too likely. If we go out another week, let's give ourselves a little bit more time to find some potential. Actually, going out to the July expiration here, we'll also once again come in at a moderately bullish forecast. And we can see that there are a couple trades here. Now we're going to stay away from the spreads here. We're actually probably just going to go for single leg because the challenge itself ends on the 26th of June. So basically that's halfway between now and this July expiration. So what we'll do is we'll really just go out and we'll look for some single leg options, and I'll just go ahead and take a look at a very bullish perspective just to see what we've got here. And as expected, there's a few calls here that are looking very attractive. The In the case of a lot of movement, and in this case the view we're looking at here is a 5 to 22% upside movement over the next month. Now that's a significant change over that period of time, and that's mostly due to the fact that over the next month we're looking at this 32% implied volatility. So really these long calls are going to get you your best leverage over that time period. So it really comes down to us making the call between whether we want to get really speculative or if we want it to be a little more conservative, whether we go with the 65 or if we go with the 60 strike. Now, I'm actually inclined to go with the 60 here because we're really measuring ourselves up until June 26th. So it's really this is just a proxy for us owning the stock at a little bit more leverage and, kind of taking the risk there with the premium. So let's take a look at what this trade looks like. And we can see that the ask right now is a 235 for the options themselves. We can get two legs in place. This is a typical long call, so I mean these charts there's nothing really surprising here. And so if we're going to be bullish on the stock, what we really want to see here as well is what kind of break even. So we've got a 62.38 break even. The stock's trading right under $60 a share. So the upside movement's about 5% that we'd need in order to break even. And if we just take a look down here, one thing I like to check out is as part of this is, if there's anything we have to worry about in terms of dividends bringing the stock down, and it looks like there really isn't. And of course, we want to see where the stock is trading relative to its 52-week range. And so we're right near the top, which is, probably a pretty good sign for the situation we're in. So what we're going to do is we're going to go ahead with this trade, knowing that it expires in July, and then we'll sort of work it out by the end of June and how that position goes. So if we can find a little bit of upward movement, that'd be great. So we'll go market. We'll stay with our day orders. We'll take a quick preview of the trade we're looking at here. We're expecting a little under $500 for our total cost to open the position, so we'll submit it. And we'll give it a second to fill at the market. And there we go. Our position's been filled right around what we expected. So now let's take a look at Zacks Bear of the day. It's Assurant, which was recently trading at $66.66 a share. They provide specialized insurance products and related services for North America and some international markets. Recently, their earnings dropped 25% due to a 2014 revision in the Affordable Care Act. And as a result, there's been significant analyst pessimism over the past 30 days, with their Q2 and Q3 15 reports or estimates being dropped fairly significantly, as well as the fiscal year for 2015 to 2016. Now let's pick up where we left off in Quantcha and see if we can find a great bearish trade for Assurant. We're going to head out and we're going to search for AIZ and see we're working again with these 4 expiration weeks. We'll start off with this one that's 8 days out, which is next week. And we can see that if we go and take a look at a moderately bearish forecast for the stock, again, not a lot of great trades here. The option chain, I believe, is not showing us a lot out of the money here. And as you can see, basically the calls and the puts are sort of picking up where the other leaves off. So we are kind of limited in our flexibility and what we can do with multi-leg trades here. And since we're dealing with such a short time frame and we're opening with market orders, we're probably going to go ahead and just limit ourselves to using long puts. This is probably the safest way. These are kind of like little lottery tickets we can take to see where the stock's going to go. And in this case, you can see with our moderately bullish view, this call at basically close to the money. It's a 67.50 call, or rather put, when the stock's trading 66.79 right now. We're looking at a break even at 64.55, so we'd have to see about 2 points of downside movement over the next week for this to be a profitable trade. I think that what we'll probably want to do is, like we did before with Dicom, is we'll go out to the July expiration and we'll take a look at what we can do for the same position. And we can see here we've got 2 legs of these puts at 175. This moves our break even, actually looks like it's up a little bit from where it was before, and so it gives us a little more time to work with it and gives us a more attractive break even. So I think based on that, we'll just go ahead and place this trade. We'll head on over to Trade here. We will select market and day, preview our orders. See that 375 number looks about right. Go ahead and submit the order, and we'll give this 1 second to fill. And there we go. We now have our Assurant puts. And so there you have it. Here is our closing portfolio at the end of week 7. You can see we're now got positions in 12 different stocks. 10 of those are going to be closing out next week, and then we've got 2 for the following week. So come back and join us again next week for our final trading week in week 8 of the Quantcha Challenge. And as always, if you got any questions or feedback, please hit us up at hello@quantcha.com or post a comment down in the section below. Thanks and happy trading.